following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour, and my pleasure to be here Monday through Friday. I just did Tom's show. It was a pleasure to do that. That was the Money Masters show, and now we've got the Tiger Technicians Hour. Dow's down 45, S&P's down 3 1/4. We've got an interesting market here because it's holding up, but there are signs of little cracks in the armor and suggests that you got to be very careful at this particular point. The E-minis are down 425 at 21.1250. There is a rectangle formation forming in the 120 and says if the E-minis close any bar, 120 minute bar underneath 2107, the pattern's going to say be careful because 2099 could be the very next key support. So, okay, let's do this. We'll go right through the numbers. I'm just fascinated. In the break between shows, I looked at the Boston Globe, and on the front page it's got UMass waterfront site spurs intense interest. Isn't this unbelievably, it's uncanny how many institutions right across the country, as I read it, but especially here in the Boston area, are coming up with brand new plans to build mega complexes. So UMass, which really the Worcester UMass Medical School has improved tremendously. It's on a par with some of the really fine schools. And UMass, the Western UMass, has got a tremendous reputation. I'm saying Western UMass because I don't really know about the one here in Boston. I don't know about the reputation. I believe it has improved tremendously. I just don't know if it's comparable, but it has definitely improved. But at the same time, this is an era where when really bad times come and young people cannot afford to go to college, don't you think they're going to be taking more and more and more courses on their computers at home or whatever they use at home? Don't you think that's going to happen? Don't you think that all those dorms are going to be rented out as hotel rooms or something eventually? All those brand new magnificent dormitories? So they're planning to take the old expo hall, raising it, and it's actually quite a waste. If you know that area, it's a desolate area. It's beautiful in that you're out in the water, but to get to, there's not much there. That's where the Boston Globe is. That whole area, it seems quite successful as a school, but that's where the Kennedy Library is. So that's been the big attraction. And yet they want to expand it. They want to take it and build parking lot, then a major campus rehaul, grander plans. Wow. You can't stop these things. And for the future, I always say it's great for the future. But I think that we're heading for some kind of a major real estate market top coming up in the next whatever meaning within the next year or so. All right, let's get back to our story. I just forgot that. Couldn't help but express my thoughts there. Okay, Dow, INDU. The Dow right now is down 51 at 18,092. It's making another arch formation, at least I believe it's an arch formation, just like it did earlier in June. And that arch formation will accelerate to the downside if the Dow closes under 18,000. It's at 18,092 right now. But actually, it's 18,750, somewhere in that area. Because why? As soon as there's an acceleration down, that weekly chart is going to change. The technicals, which are not very good right now, even though the price is held up, the weekly chart says there's an arch formation that has been unrelenting. And there was a cup formation that failed with a high of 18,351. No, I shouldn't say failed. Has the potential to fail if there is a break of 17,579 key support. Not very far away from here if you're looking at weekly intermediate term charts. That's number one. Number two is the upside has been a real struggle. And I'm actually surprised that the market's held up this well with the whole Greek fiasco going on. But at the same time, That's that rotational aspect, how a Netflix and a Facebook can individually take the market much higher when your price lines, PCLN, have been failing miserably after spectacular moves to the upside. Google as well, Amazon. I could just go through these stocks where Amazon actually is retesting, could have a retest of the 452.65 high for a leg D up. So Amazon, Facebook, and Netflix are your leaders right now in the NDX 100. I was asked if I would have a look at the NDX 100. I'm going to look at the Qs because the Qs this morning snuck to a leg D. Now you've got your D, but you failed to take out the 111.16 high in the weekly chart. Could still happen, but it hasn't happened yet. Now look at this beautiful left side, right side price time match. You see the left side from the 27th of April to the high of at 111.06 on the 27th of May, exactly 1 month. Now look what's happened. What is the date today? The day is the 24th. Now if I go like this and I go new parallel, and I grab it if I can find it, and I change the color to green, and I make this one red, so you're really pink, so that you really know what I'm talking. If you're looking at my charts, you'll see you've got until tomorrow to make a left side, right side price time match of 111.16. So we got within 3 cents, and that's really important. And what's important to me also is that you constantly are making these arch formations. The lowercase h in this case really is an arch because it's testing the old high. And there's another one, and that says that if the Qs by Monday afternoon at 2 o'clock Eastern time are trading under 109.20, 109.20 to 108.50, trading in that area, there's a real good chance that you've made some kind of at least a short-term top, if not an intermediate-term top. All right? So now that's the QQQ series. Look at the IWM. IWM has got that extension today to 129.10. And if there's a close in the next 3 days under 126, I make it, it's sort of 126.90 to 126.30. If it closes in that area, that's going to suggest that the weekly chart has made a peak G, unusual G, and that we could be pulling back, and we could be pulling back quite sharply. If there's a break into the 130.70 area by Friday afternoon, Monday, wrong. This thing is going, I'm wrong in assessing that there's a short-term, at least, peak D in the 120-minute chart that could pull us, drag us back down into the 127s. I'm wrong about that, and that says you are going to see the VIX index get even lower. It's hard to believe, but I don't think that's going to happen. I think that we're in a very vulnerable spot right now, which is the reason why my opening call, we have got short positions. Actually, we got a very interesting short position today, almost at the high of the day. Stock we've been talking about, recognize it as a hat-trick top, monthly, daily, weekly top that should see a pullback of significance. And I'm not sure, I'm not going to mention the stock. I just want to say that it's a stock that we've had our eye on for quite a while. And I think that there's going to be a problem with that particular stock. So we'll see what happens. It's a very important stock in the whole area, in the healthcare area. So, okay. IWC also did the same thing, snuck to a new high yesterday, hit that trend line resistance. I'm going to make it red so you can see what I'm talking about there. And what is it doing? Has a lower high today, making a potential peak G/C. Could even make a little bit of a D then tomorrow and the next day. But my suspicion is this is telling us that you've got to be careful because the 120-minute chart hit the top of the Chapman wave inside track up channel resistance, and it's pulling back, and it's at 83.94, down 22 cents. And yesterday's high was 84.28. We type that in, 84.28. Okay, moving along. Now I want to do this. I want to go to the TLT. I did this during Tom's show, during the Money Masters show, and I'm going to do it again. The TLT is at 116.50.55. It's making the H pattern. That H pattern is is a potent pattern. Let me just do this. A to B hasn't broken down, and it says that if there's a cup formed from a failed arch, meaning the arch didn't break down, I'm going to say there's a chance that money comes out of stocks, out of equities, and at least some of the money goes back into the so-called safety of bonds. And I'll only say that's happening if the TLT, which is at 116.48, does not take out that key support at 114.80, the 200-period moving average support in the weekly chart over the next 3-4 sessions, but instead has a sudden spiral to the upside and is actually able to leap, over the 19th of June high of 119.19 in the arch formation and get into the 120s. If that happens, and I'm saying if because we really don't know, because it's a lousy weekly chart so far. If that happens, that'll suggest that this market has more to go down, and the safety of yields coming down and bonds going higher is going to be the order of the day. I haven't got the chart up at this moment. I will show it in a moment. After the break, I'll get to it. So the question is J and K. J and K. Not J and J, but J and K. Well, it's the same thing. J and K is the Spider Barclays high yield bond ETF junk. And not for no reason is it called junk. A, B, C, D. Made a D in the 120-minute chart. Let me show what we do. Remember the Chapman wave methodology? Make it easy. You come down sharply, then you start from the left side low bar. You identify a significant low, and you go count the peaks, and it goes A, B, C, and D is where you can expect either a recycle to the upside, but that's also the potential for where you can get a deeper pullback. And let me go to this chart back here, and I'll say you've got yourself an A, you got yourself a B. And I would recommend that you could see, yep, that's a C right there and a D right here. But the MACD hasn't turned down, so I have to only put a plus here. If, in fact, the junk bonds trading at 3881.03, down 0.03, able to get to the 39s in the next 2-3 days, no. 39.10 to 39.25, that's really the area. If it can get there and the market pulls back, now the S&P is starting to match the Dow. Remember before it was down just 0.14 and the Dow 15, and the Dow was up, down minus 34. Now the Dow is down 0.32, S&P is down 0.22. It's getting closer. So we'll be keeping a very good eye on this. Now, I wanted to do something else. So that's the junk bonds kind of going with the bonds, etc. And the question then was Netflix. You know, this is amazing. Carl Icahn, evidently from what's been said in the den, Carl put out a tweet saying he got out and said he got out of the stock. So he's out of all of his Netflix. What a genius.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative market-safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year market-safe power metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we are back, and Netflix opened at 700.10, hit 706.24, trading now at 688. And Icon evidently got out of everything. And I remember when he went in, I thought, God, what does he see? I mean, I understand what's going on, but he put so much money into it that he must have seen something that was quite extraordinary. But I've also, over the last 3 months, have decided that this is called the entrepreneurial age. And at the same time, while it's called the entrepreneurial age, I believe that the next phase, just as in the 1920s, you had the so-called bankers, the Rockefellers, the Morgans, etc., coming in to buy, and it was so-called support the market when it came down. In fact, what they were doing was shorting and then covering. I think that this is the age of these guys, these advocates of proactive advocates of different things. It's going to be very interesting. Let's go to Travis in St. Louis. Hi, Travis. How are you?
Just fine. Good morning.
So now I'm going to look at Tokai and Tokai Pharmaceuticals trading at 13.73, down 16 cents. Now let me ask you, Travis, what was the reason for the call today?
Well, I told you a couple weeks ago we were waiting. I told you there was we're waiting on phase 3 enrollment, and that came this morning. The news hit this morning. So I pretty well have my full position on. I've been accumulating this morning around 1360, 1350, 1370, just nibbling at every time it dips down. But I'm really surprised it's actually not up $1 right now.
Okay, so you know what?
Anyway, I just wanted to see kind of where you think this is at now, because I'm looking out about 6 months to the next year or so.
So
I'm expecting a pretty large move up in this.
Let me just do this, because I know that you have a long-term horizon, fabulous long-term horizon. I know that you look at the different stocks as they perpetuate their whatever program it is and whatever FDA rulings they have to go through. You are looking at each one individually, and you are looking at using pullbacks to accumulate and then maybe get out as it's getting closer or the result comes out. Now, the only question I have for you now is that having a full position when it is closer to the 200-period moving average of 13.96, where it's hit resistance before, A, B, C, D, E, made a peak F right at the 2nd and 3rd of March high on the 200-period exponential moving average. So does that mean that this is now the closed position, or is this a position that you could still take profits on and you can still manipulate it a little bit, or you're now in the position and now you have to just monitor it?
I'm looking to probably pick up another. I'm honestly not quite all the way in. I mean, I've got room in my portfolio that I would probably buy another, 300 or 400 shares yet. But I pretty well got what I want, and I'm not planning on selling these shares. I mean, I think at a minimum this stock trades $20 this year, and I'm just shocked that it's actually down on this news, because this was the real risk that I thought was still there, was some sort of a delayed response where the trial didn't start on time, but they continue to hit the mark, and they continue to guide the street well with what the program is doing. So I'm anticipating good things, and I'm expecting this drug to roll right through phase 3 over the next 18 months.
So in essence, you can't really be disappointed, because it's gone from when we last spoke in the 12s. It's already hit the 14s, hit 1448, was it 1445 yesterday?
I think I called you, I don't know when I called you, probably the first time a couple of months ago, when it was down around 1150.
Right, that's right. Okay, because I know that I had notated it and I kept following it, and it made that move, and then the sudden spike up on the 10th was the one that surprised me.
I called you last time. Yeah.
Okay. So now what I'm looking at is this. As it stands, it's purely technically. I forget about all the FDA approvals, whatever it is that it takes. Just let's forget it for the moment. I want to go through it on a monthly basis. The monthly hasn't taken out the original low of 967 after the IPO. The month after, back in October, it went to 967. Then it rallied, but then it retested at 977 and 977 again. That was in April and May, and this month it's rallied over the 9 EMA. So you've got a start of a move that I would immediately grab my technical tools and grab it and just say, hey, I've got myself a nice rectangle here with a move to the 1522 as possible, and if it closes above it, the next level to watch would be the high of November at 1787. But on the way, things can happen, and that's what I wanted to talk about. We'll be back with Travis. Dow's down 56, S&P's down 4.5. Basil Chapman, Tiger Traditions Hour. Be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Dow's down 58, S&P's down 5. We're back with Travis from St. Louis, Minnesota. And what we're looking at is TKI Tokai Pharma Inc. It's a prostate phase 3 pharmaceutical. They do other things, I'm sure. But 13.65 down 24 cents. Now, the only reason why I want to take a little time here is, Travis, usually when you're buying on a pullback, and we're looking at the upside. In this particular instance, one of the few times I know that you've actually bought on the day of an announcement and is pulling back. And did you buy because you thought that it would open, whatever it opened at, it would push higher into the 1450s or higher area? Was that the reason? Oops. Travis. Maybe Travis is gone. Okay. Well, I'm going to do this in any case because I know that there were a lot of people that were listening to you last time. Hopefully they've benefited from your call. It was back in the 11s. And I'm just going to ask my engineer, put this Travis gone with a question mark because I hadn't quite finished. All right. So there's the question, and yeah, he's gone. Okay, so Travis, I'm sure you're listening. So this is the first time that I know that that I can recall. Maybe I'm wrong, but usually you wait for that incident, and then it goes higher, and you stay in the position, and you get confirmed that you've added correctly, or sometimes you feel that you've missed it. Now, this is one that you haven't traded quite as successfully in the sense that you were going to go in lower down, but you got pretty much really the lows. But I know that you felt that you could have got a little bit better price, but this is still very good. I don't want to change your thinking other than to say I'm going to draw in. I've got a rectangle in the 120-minute chart. I'm going to draw an oval. That's a little different in the daily chart and suggest a couple of things. And one is I think that the IBB is really close. It's really close to turning down again and turning down quite sharply. I could be wrong, but that's what I'm thinking. And if that's the case, it could drag down some of the others. Well, what we had said was that some of the smaller stocks, I wonder if I've still got this on here, CORT, let me just look at CORT. Some of the smaller stocks, I'll get to it in a moment. The little guys that nobody's ever heard of, the $5, $6, $7, $10 ones, have really had a terrific move. So I don't want to change and get you out of the position, but I am going to make a very strong recommendation. And the recommendation is that if Tokai trades for 3 to 5 hours, in other words, for a day, if it's trading underneath 1320, the low was 1323 on the 19th. If it's trading under that, I would probably recommend that you just lighten up a little bit. It means you're going to give up something if it suddenly spirals higher again. But I think if it does that, it's going to take a digestive phase that goes down to the low 12s. And that's where you can call me and have a look at it again. You might say, you know what, for 30 cents or 60 cents or whatever it is, I'm not really interested in trading this. I like the position. That's up to you. But if you ask my opinion, it's hit the 200-period moving average. It's struggling there. It can't break above it. It says to me it's probably going to retest the lower part rather than the higher part, if at all, if it takes out the 1323 low and starts to trade in the very low 13s to the high 12s. Then I think you're going to get a better buying opportunity. And since I know that you're putting in quite a considerable sum in terms of the proportions that you like to have, I would suggest that taking some off that you can put back might just be a prudent way of playing it. It means that you might give up another spiral to the upside. And today just might be a one-day event, and tomorrow it could be up at the 1480s. So that's why I don't want you to change your position at all unless it takes out that level, because that would suggest to me that it's going to pull back a little more. Then I'm prepared to look at it. I'm prepared to look at it. 1251 is the 200-period moving average in the 120-minute chart, somewhere between 1260 and 1235. I'd be very interested in seeing how it does. Hope that helps you. Good. And I wanted to spend some time because you've spent time with us, giving us a great deal of information. So thank you. Apple question in the den. Apple, hey, nice spike up in Apple when it was doing nothing. You see, that's what I mean. This rotation is really, for bears, it's frustrating because you're kind of right, but you're absolutely wrong. You're kind of right thinking that some stocks are looking very poor, but it's those few stocks that are showing the spirals. Dow's up, Apple's up 2.36, up $1.85. So that's helping the Dow, helping the NASDAQ, which tells you how weak the Dow is, because it's down 63, even with Apple up 235. So the question is, well, what is it doing? I think it's just in this trading band. I said that before. Until it breaks 125, it's in a trading band between 126 and 130 and 3/4 to 131.20-ish. Now, I don't even think it's going to get there. I say 130.50 trading range. And then I think it's going to make lower lows and lower highs. That's the way I'm looking at it right now. Sharp was another one. Sharp right here is, yeah, it's holding well. I remember yesterday I said it could be making the H pattern. I still think it is. No, I'm going to hold off. I'm going to say SHOP, shop something, Shopify Inc. If you're long it, that's fine. I would just say I'd take money off if it breaks under 32.50. I'd definitely take some money off. But at this point, it's holding okay. It's up 75 cents on a day like this. And you want to see it break 38.50 by Monday afternoon without taking out the low of the 19th at 32.55. Let's just make it as simple as that. Okay. Now, the things that I want you to do today. I want you to look at the XLF. I was going to do it yesterday, and I believe that I ran out of time. No, I promised someone I would look at the SLV in a little bit more detail. So the question was, he wanted to buy, I think it's called the USLV. Oh boy, am I remember that correct? Yes, the USLV, which is 300% long, 300% short silver. And I said, you can buy it, but the SLV, which I'm going to, what am I doing here? The US is 300% long silver. But what I said is, he wanted to do short using the S. I don't remember. What is the short? Is USLV. What is the short for the triple short? Well, I'll use the SLV. And I said, no, if you want to short the SLV, you can get in now, but you've got to be prepared that the whole area of 1520, it was at 1550 at the point. I said the area of 1520 to the low of 1463 is a bounce area support potential. And then if you're in it, you just got to appreciate that that's the way it is. So you can't expect a huge move, but a move nevertheless. Now, I can't remember if he did go short via that instrument, but at the same time, there it is. Look at the 120-minute chart, trying to find some support in the 1513 area. It's at 1515. But at the same time, the weight of evidence is suggesting that that doji candle of yesterday, a close above it, above 1522, says you can have another move, maybe test 1534, the 9-period moving average, but then you should be coming back to test the body of the candle, which would be at 1515. But if there's a move down from here, a close below 1507, that's going to suggest you've got to be careful, because the low of the week of the April the 24th, 1493, becomes your next target. So I'm looking at silver, and I'm askance looking at it saying, wow, you just haven't shown strength at all. It looked as if you were trying to hold a support level, and then you failed. I've been looking at gold as being weak. Gold, the GLD is down 44 cents again, 112.45. You know, I didn't do the numbers. So the gold is down. Gold is down $4 at 11.72. It looks to me like it wants to test in an arch formation. So many arch formations. Test the 11.62 low of the 5th of June in the continuous contract. And that suggests to me that the dollar index is going to make a leg C. If it doesn't do it today, extend the leg B today to make leg C tomorrow at 95.65, because that's going to be very important. To break above that would suggest that you've got a cup formation with a good MACD and the stochastic now improving and fighting that arch formation, the H formation in the weekly chart, now making a cup formation. But you don't feel secure in the cup formation until you take out the left side high bar of the arch, and that would be at 97.78. So that's simple for the dollar. And the EUR USD has the opposite pattern, failed at the 9, just under the 9 EMA, looking very weak, and it's making a cup formation that turns into a lowercase m formation in the weekly chart. Now I'm going to go to the VIX index. Always do the VIX because it's so important. The VIX index, trading at 12.34, up 23, is trying its very best based on the 120-minute chart, which made, was that the low bar? Yep. So it's made a left side, right side price time match in a shorter period. No, let me just do this. Let me show you something. Plumb line, left side, plumb line, right there, right there, right side, right there. Change the color to red. Remember, green, red going down, green going up. So here we are, right there. And look at that. Is that not oh, I haven't done the Chapman wave inside wedge. So I can't take, I should normally take it from there. Okay. All right. So here we've got the the VIX index, the VIX index, trying its best to have a higher low bar at 1193. Yep, 1193. And that 1193 suggests that it's very clear on the parameters, because at 1236, a close below 1193 says, buying pressure's there. What are you thinking about? I mean, all you want to do for the last 6 years and 3 months is to just buy every single dip. But if there's a move by the end of the day into tomorrow that takes the VIX index above 1350 into that 200-period moving average on the 120-minute chart of 1374, and by Friday afternoon's close, you see this VIX spiral to the upside because the market drops 200 points, the Dow drops 200 points, you will see this VIX come alive, and the arch formation will turn into a beautiful cup formation in the daily, and then all of a sudden the weekly says, you know what, you can lower that a little bit because you have to go to the low bar of 1210 of 1182. 1182, right there. Change it, edit. 11.82. And the last high was in the, what do we say, 1193. And all of a sudden you've got a very soft bowl formation rather than a cup formation. And then we'll see moves to the upside towards the 16.28 level on the VIX index, but that's only if we don't take out the low of yesterday, 1193 today or tomorrow, because you have to have a rally, and that VIX index rallying sharply would suggest the inverse. The buying pressure of the VIX creates the selling pressure in the market. Actually, that's the tail wagging the dog. It is the selling pressure in the market as represented by the barometer of Richard Arm's volatility index. No, did Richard Arms do the VIX index? I know he did the Arms index, the short-term trading index. No, I can't remember who worked on the VIX. Anyway, on the VIX index, that would be the buying pressure is if the VIX goes lower, selling pressure if the VIX goes higher, some market selling pressure. Make it simple. Okay. Now, as it stands, I want to look at the PPHs because I don't believe I will actually land up a PPH. PPH is the Market Vectors Pharmaceuticals. Leg E in the monthly, I'm calling it E for now, with a potential doji candle. Peak D with a retracement right now, right shoulder, potential right shoulder failure if certain things happen. At 73.04, the PPH has traded. Now, this is a very familiar pattern. It's a very unusual pattern, but familiar to those who are used to a particular technique. Let me grab my technical tool that makes an oval pattern. And it says very clearly, this could be the pattern that we call the stork leg formation, except it has too many things that are not coinciding with the pattern. And the one is, do I hear music? What a quick 2 hours it's been. Well, we've got another 5 minutes. Okay, so we've got a break coming up. Basil Chapman, Tiger Technicians out, Dow's down 58, S&P's down 5. I'll be right back, and we'll talk about the PPHs, really, which have been phenomenal, the Market Vectors Pharmaceuticals, and we'll have a look at some of those pharmaceuticals. I'll be back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Folks, so we're back and we're looking at the PPHs, and the PPH has this pattern here that has basically an oval pattern, but the MACD and stochastic have rallied quite sharply with the price acting very well. However, the unbalanced volume is very poor, and it suggests to me that if the PPH, that's the Market Vectors Pharmaceutical ETF, starts to slide underneath at 73.04, if it starts to trade between 72.15 and 71.70 in the next 3 to 4 sessions, there's a real good chance that weekly chart is going to deteriorate, and from here on, you're going to see lower lows and lower highs. That's the way I'm looking at it. I think the upside is very limited. If you want to look at Novartis is the lead. Let me just see if I've got all these. Novartis. Just run these down the next minute or two. See, look at this. Novartis, same pattern. Fading patterns already fails in the weekly chart. Monthly chart is still very good with hints of a pullback. So that's holding us up. The second one is Johnson & Johnson. Same pattern. Everything's got the same pattern. Very important that they hold. I don't think they're going to hold. Pfizer, PFE. Look at this. Pfizer. Same pattern. A little bit better actual technically, but still a 34.40 if Pfizer starts to slide underneath 33.80. It's at 34.40. That's not a big deal. 60 cents in the next week without going to 34.80 goes to 33.80. Hey, that's negative action. Look at Valiant VRX, and I could go through all of these. Merck, the works. Valiant. Same pattern, that H pattern that looks like it's going to fail, lowercase h. Let me do Merck, one of the big ones. Merck, right here. Merck is same pattern over and over. So I think that certain sectors are becoming much more vulnerable. The IBB only pulled back a little bit today, down $1.67, but there are signs that if it takes out in the next 3 to 5 sessions, 375 closes under that, then all of a sudden you've got yourself back in a downtrend. So we're going to watch. In the meantime, I'm going to make this a big deal as we close out today. Let's see, you've got Daryl coming up, you've got Steve coming up, you've got Dave coming up, you've got Tom O'Brien. I'm not sure who's doing Tom's show this afternoon, but I'll be back tomorrow for my regular time. And don't forget my opening call. Check it out. This is a perfect time when we're starting to put on new positions. Got a nice one today. Actually, a couple that we added seem to be working out. We'll see what happens. Day's young, as I always say. The VIX index right now is up 33 cents. I would like, for my own purposes, I want a pullback here. I don't care about the trades or anything. I want a pullback because we need to reinvigorate this market in a different way. That's the reason why I'd like a pullback. Because if we go up sharply from here, this could start an acceleration phase. I do not want to see it now. I want to see it later in the year or early next year. So let's go through this. 1244. At the on the VIX index, the short-term volatility index. No, the volatility index. The 120-minute chart is suggesting that there could be a bit of a bounce, but a bit of a bounce is not good enough for me. It's at 1244. I want to see 13 to 1320 by day's end, and if we kind of stall and don't do that, and tomorrow's another stalling session, that's just saying that buyers are still there. Don't get too excited. Once I start to see higher highs and higher lows on a consistent daily basis in the VIX index with the cover of bad news, the market interpreting whatever the news is poorly, that's what you want to see if you want to be bearish. Otherwise, you've got to say, hey, the cork in the water just keeps popping to the upside. That's been the market for 6.25 years. So now what I want to see is some kind of a change, a more digestive move. Why? Because there are certain stocks that I would like to get for the intermediate term as longs, and I want them on a sharp pullback. Simple. So, meantime, back at the ranch, that's the end of the show today. So please give me a call tomorrow if you have questions. Check out my opening call. I think you will find it very interesting, very informative. Thanks for being here. Have a great day. See you tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.